Hello traders, hope you are all doing great. So yesterday I was in a funeral. One of my friends' younger brother, he is just 20 years old. He lost his life in a bike accident. So I couldn't avoid. It was very unfortunate and it was really a bad news. But the good news is, because I went to the funeral, I was not trading yesterday and today also I didn't trade. And if I traded yesterday, they would have done funeral for me, right? So that was a kind of volatility, and with when it comes to our volumes, it would have been very terrible. So good thing is that I didn't trade, and hopefully I have saved some money, right? So markets are likely to be like this. Now FIIs, they have been selling, inflation is high, interest rate is high, there is no positive news, that and this they are telling. So I will tell you a very interesting thing. So I was going through a website called AMFI. So if you see this is Association of Mutual Funds in India. So every month they release a report. So how is their inflow data? They release a data sheet, they release a fact sheet about data, how is their inflow, how is their outflow and everything. Now what they have mentioned here is, in their latest report, that the inflow, mutual fund inflow has gone down by 44%. Right? So if you, just to give you a perspective, from April to May, there was an inflow of 28,500 crores that has come down to 15,428 crores in the month of May. May 44% drop in mutual fund inflow, SIP inflow. Now why am I saying this? Why is this data very important? Because DIIs are like mutual funds institution. If they don't have funds, they are not going to support this fall. Let us assume that FIIs are selling and DIIs are not here or not able to support us, which they are doing nowadays. Then what is going to happen? Now going forward, what I think is that going forward, this redemption pressure is going to be higher. Now June 8th, our Governor Shaktikanta Das is going to come out and he is going to increase the interest rate by maybe 50 basis point, that we really don't know. If he does that, even more redemption pressure will be there in mutual funds, because many people will move to maybe FD, fixed deposit, because of attractive interest rate. See, you don't take any risk at all, right? Even if you don't take risk, let me give you an example. Let's say you are investing in any equity fund, okay? Last 3 or 4 months, market is not moved anywhere. Of course, it is going up and down, but it is not going anywhere, right? So last 4 or 5 months, it is at the same place. Now, equity mutual funds will not give you any return, right? Let's say you have invested in debt fund, right? Debt fund, if they increase the interest rate, FD rate, maybe people will pull out from debt fund and go to FD. So there could be reason, there could be inflow going forward. Mutual fund inflows can further reduce down. So if you want, you can go and see what is happening when it comes to DII activities. So that is having a very good insight. So coming back to the markets, now I feel, I am not either bullish or I am not bearish. Now I am kind of neutral. Even though we say that this DII inflows are reducing and redemption pressure are inching up on the higher side for mutual funds, what the other story is that even FIIs are pulling. See, FIIs for the last 1 year, they are pulling out. But what analysts are saying is that retail investors are holding the market, right? So between 2020, 21, 22, lots of retail investors, lots of new traders have come into the market and they are holding the market. So even though FII holdings in NSE listed stocks have reduced from 27% to 23% to 19%, at the same time retail investors holding in NSE 50 NSE listed top listed companies has increased from 9% to 12% to 13%. So FII holdings are decreasing. At the same time, retail investors holdings are increasing in Indian market. So that could be the reason why, even though US markets, Dow has fallen down by 20%, Nasdaq has fallen by 30%, S&P 500 has dropped by 30%, 20%, but Indian markets have not dropped significantly, or not dropped as compared to, if you compare with US market, it has not dropped so much. So that could be, the retail traders could be one reason that the markets are still holding up. But what I can say you is, markets are really choppy. It is very, very hard to trade. Like, there is one day gap down, gap up, huge moves, 200, 300 points move in Nifty in one day. So it's kind of, strategies are not working. Positional traders are feeling the heat, and option sellers particularly are feeling the heat, right? So maybe you will have to come out with the intraday strategies. You do the strategy, whatever strategy, in one day, and exit all the trades. So you can do that if you want. And looking at the markets going forward, we really don't know how the markets are going to behave. Now, what I can see in open interest is that there are significant call ratings in 17,000. So if you see this one, this is monthly. So obviously today is expiry. So people are writing 17,000 to 16,500. Now people used to say 16,400 is a good support, and actually market has respected that support. So we have been seeing for last 3 or 4 trading session, market Nifty tried to break 16,400, but it had sustained above 16,400, and today we have closed at around 16,650. So market may be range bound, be choppy between 16,500 to 17,000, and when it comes to Bank Nifty, it's going to be somewhere around Bank Nifty is one thing which is concerned. 36,000 is very seriously good resistance, and 35,000 can act as a support, and that's what I see in Nifty and Bank Nifty, right? And we haven't got the FII data. I'm sure they would have sold. They have sold high, but let me check. Yeah, we haven't got the FII data till now. So we'll have to wait and watch how they are going to come out. I'm sure they would have sold heavy little, but it's okay. As I told you, there are retail investors to hold the market, and that is the reason markets are kind of choppy. I'm not saying markets are going to crash, but it is going to be very choppy for a very long time, because if you see the Indian stock market history, it was always FIIs, institutions, who will dictate the trend, whether it is going to be uptrend or whether it is going to be a downtrend. It is dictated by institution. But now the scenario is changing. From institution, it is moving to retailers. And if it is FI, if it is institution, they are coordinator, they have synchronized selling or synchronized buying. They work on a synchronized thing, but we retailers, we don't have any synchronization, or we don't have any association, or we don't decide. It is all individual decision, right? So that could be the reason why markets are choppy and this transaction, whenever this, we don't know when this transaction is going to be complete, or when the FIIs are going to stop, or when the DIIs are going to stop buying, and when retailers are going to when retailers are going to buy more. It is all conspiracy, right? So we'll have to wait and watch how things are going to span out. So going forward, I'm not saying markets are either bullish or bearish. We'll have to wait and see. Markets are not moving anywhere, so we will see how things pan out. As of now, I don't have any position. We'll have to wait and see how things pan out. Let us hope for the best. Thank you for watching. Take care. Bye.